Welcome to another episode of your favorite program, Centrally Speaking.
The program that keeps you informed on the work and functions of Jamaica's central bank, Bank of Jamaica.
I'm Sheena.
She likes the moonlight as Sheena, but I'm Sheena, and she's Anna. And we're happy to be here in our fifth season.
Season 5. Can you imagine? 5 years now we're up on TV.
Yep.
I'm talking about the work and the functions of Jamaica's central bank. By the way, we are at the central bank for this episode. Yes, we're downtown. We are in the Bank of Jamaica building. Ooh, nice artwork behind us.
And we want to big up all our regular viewers and welcome aboard those of you who are just tuning in for the very first time. We are glad that you could join us. We have a great show lined up for you because we have the Senior Deputy Governor for Bank of Jamaica coming to us, and that is Dr. Wayne Robinson.
He'll be talking to us about all things inflation. That should be an interesting discussion.
But first, let's check in with the streets.
Which banknote is the Right Excellent Marcus Garvey featured on?
I don't really know because I don't really study all of the money them.
I have no idea. I don't look at them. Not observing them. I just want them to spend and I get them to spend them.
Here they know. But you know, so I don't know. All me do I spend. Me not look.
I don't even know.
Marcus Mosiah. A 2 euro the pound one money, and I think at $100, something like that. At $100.
I don't tell them, I don't look at them. I have them now all on my bill full.
Marcus. I believe at 100.
Great answers from the streets, as usual, Anna. Well, I know the answers. Do you know them, Anna?
Of course. The national hero, Marcus Garvey, there on the bills.
Yeah.
Yeah, man, him alone.
Him alone.
Him alone sit down on the bills. The only purple note is a $500 note.
Yeah, what is the blind feature?
Marcus Garvey.
All right, we have to go back to school with that one day. But the blind feature on the 500, you feel for an X on the top left corner to the back of the banknote.
Yeah, my girl, I never have to load up a thing, so.
No, load you.
Joe, me never know say X up on it, but I know the other note them do.
All right.
Yeah, I know the $5,000, the most
Take
important
mine.
notes.
Then you show up yourself some more, you know? All right.
Oh, we soon learn about it. We have an episode coming up talking about banknotes. Watch me and then time there. But anyway, viewers, more centrally speaking after we return from the break.
Jamaica's currency has a fresh new look. Introducing the new $50 note. The new $100 note. The new $500 note. The new $1,000 note. The new $2,000 note. The new $5,000 note. Jamaica's new banknotes, modern, more secure, and made to last.
Thanks for staying with us here on Centrally Speaking. Joining us now is our resident president of economics, Senior Deputy Governor at Bank of Jamaica, Dr. Wayne Robinson.
Wayne, welcome back to Centrally Speaking.
Thanks, Sheena. Thanks, Anna. It's certainly great to be back.
So, Dr. Wayne, we're talking about inflation again. Your favorite topic, country's favorite topic. So the first question should be, what is our current inflation rate?
Statin just released the latest data for May, which shows that the annual inflation currently is 6.1%. So when we look at the basket of goods and services that Statin actually tracks, what it's saying is that on average, the price level in May this year, when you compare it to May last year, actually went up by 6.1% on average. So some prices may have actually gone up by more, actually did go up by more.
Right.
Some prices by less, and indeed some prices would have fallen.
Right.
But on average, when you look at the basket in aggregate, prices move by 6.1%.
So Wayne, why is this of interest to us?
Recall following COVID, due to factors outside of Jamaica's control, we have had to contend with rapidly rising prices. So every time you go to the shop, you find that the dollar is buying less and less.
She don't go shop.
She not don't go shop.
I do.
Oh, she goes supermarket.
I go to the
Okay,
supermarket.
sorry. But wherever you go to buy stuff,
Precisely.
yeah, that's just a
Shopping.
fact.
Yeah.
That was just a fact of life of
Right.
every Jamaican.
Yeah.
In fact, the inflation rate rose as high as 11.8% in April.
Yeah, it was scary.
Exactly. But since then, we have seen a decline.
Right.
Steady gradual decline in the rate of inflation.
Okay.
So it has fallen from the 11.8% in April last year to 6.1% at May,
Okay.
which is a little bit of a good news because certainly things are heading in the right direction.
So since it's a little higher than what we wanted, I remember you teaching us on a previous Centrally Speaking program about the target for inflation. You want to talk to us a little bit more about that. What is the target? Is it the same? And, you know, how are we moving? So we're moving in the right direction.
And
if, you know, the target is what I actually remember.
Okay.
But I won't say it.
And what was the
I
target?
would say,
I would say, me, Dr. Rob, 4 to 6%. Touch me for that, Anna.
I had the 6.1. See, you go on with things.
In April, the minister set the target at 4 to 6%.
Yes.
And that hasn't changed. And that is what we have been
In
laser...
April when?
In April 2021.
Right. Okay, cool.
Right? And so that is what we've been laser focused on. And I can tell you, I mean, we have to actually report to Parliament and by extension the public, explaining what we're doing to achieve this target and how well we are performing. And I even go beyond that. Whenever we actually miss the target, we have to actually write a letter to the minister explaining why we missed the target, what are we doing to ensure that we get back to the target. And that is actually published on both the Bank of Jamaica and the Ministry of Finance's website.
Wow.
But as I said, the good thing is that all the indicators now are suggesting that certainly by October or by the last quarter of this year, the inflation rate should come back within the target range.
4 to 6.
Yes, in fact, in April we did get back there a little bit. But the process towards getting back to the target isn't going to be smooth. It's going to be a little bit bumpy.
So, of course, you just told us that you are working toward getting inflation back to the target range. But for those of us who are curious, what exactly is BOJ doing? What did you do between May last year and May this year where you moved from 11 and you gone at 6.1? What is the magic?
First of all, what I should say is that thanks to the solid analytical and forecasting work that the economics team at BOJ did, we saw from very early that inflation pressures were going to build very quickly and the inflation target was going to be breached.
Okay.
And moreover, as time went by, we realized quickly as well that the impact of this shock was going to be much longer than we had originally anticipated. So armed with that, we actually started to move on monetary policy very early. So we did 3 things. First of all, in October 2021, we started to raise the policy rate.
Okay.
And between October 2021 and November 2022, we raised the policy rate by 650 basis points, moving it from 0.5% to 7%. We have not moved it since then. We have paused on that. But we did 2 other complementary things as well. We were very proactive in the foreign exchange market, and we tightened the volume of Jamaican dollar liquidity that was available in the financial system. In other words, we mopped up liquidity. And why did we do this? The reason is, the fact is that this problem really emanated externally from the significant rise in imported prices, in imported inflation. So whilst the exchange rate continued to move in a flexible way, we recognized that we had to moderate, we had to temper the pace at which the exchange rate was moving. And in so doing, to mitigate or offset some of the impact of the higher imported prices that we were experiencing. And that worked pretty well, those three measures, we believe, in tandem with the fall in imported inflation that we have been seeing, or the deceleration in imported inflation we've been seeing. That, in addition to the tight monetary policy, Anna, is what is leading to the favorable and positive results that we're seeing where domestic inflation is concerned.
So Wayne, how important is it for us to get back to the set rate? And if it is that we don't get back to the rate, what are the implications for the economy?
First of all, inflation, particularly very high and rising inflation, hurts everyone.
Right.
And the poor and those that are on fixed income, wage earners, are most vulnerable. And I even go further. High inflation eventually doesn't even help businesses as well. Because in an environment where inflation is high and prices are rising, their costs, the cost of doing business, is also rising.
Okay.
So it then makes doing business itself that more difficult. It makes planning for the future more difficult. So in that environment, what you find is that investment plans get shelved or significantly altered, which then eventually affects economic activity, which then eventually affects employment. So high inflation is bad for the society, it is bad for the economy.
Okay.
So that's why it's important that we try to get back inflation into a 4 to 6% range.
So what makes inflation go up and down in the first place? You know, you intimated some of it. There are external factors that play a role, but domestically, up and down.
A number of factors. First of all, there are demand factors. Whenever there is excess demand in an economy, so whenever you have too much spending, so you have more demand that's chasing fewer and fewer goods, you're going to get inflation.
Okay.
So if you have very loose monetary policy that's putting a lot of liquidity into the system and into the economy, and also if you have loose fiscal policy, that is just going to create excessive demand in the economy, and that is going to drive inflation. There are cost factors as well. When the cost of businesses rise, if the cost of electricity or wages go up, or the cost of fertilizer for the farmer, when these things go up, well, business is going to want to pass these things on to the consumers. Now, of course, depending on the state of the demand, then that will generate inflation as well. There are supply factors as well. When we have bad weather that wipes out the agricultural crop, or when we have a war, like the war in Ukraine, or if we have supply bottlenecks, that's going to affect the supply that's available to the consumer and to the economy. And again, depending on what the level of state of demand is in the economy, that will also generate inflation. And there's one other factor, one other interesting factor.
What is that?
Well, just what people think that inflation will be. People's expectations of inflation will cause inflation. Yes, but think about it. If you're in business and you think that inflation is going to go up, so therefore the cost to you is going to go up, you're going to want to get ahead of that. And you're going to want to raise prices.
Preempt it.
You're going to want to be preemptive. Or if you're a worker and you expect that inflation next year is going to double,
You want
well,
to
you're going to be asking your boss
for more money.
for more money. And the higher wages, again, will generate more inflation. So just what people think or expect inflation to be can also affect inflation. So in managing inflation, Bank of Jamaica has to monitor all of these factors and how they are actually combining, the interplay between these factors. We have to carefully monitor those, carefully think about how it will play out, how all of these factors will play out, not just today, but a year ahead, 2 years ahead.
Okay, so is our inflation rate similar to what is happening internationally?
Well, we have been seeing moderation in inflation globally.
Okay.
And as I said, this is because we've been seeing an easing or a decline in international commodity prices. We've seen a decline in shipping costs. The supply bottlenecks that emerged as we came out of COVID, those are easing. But the pace at which inflation is moderating, as you'll appreciate, will vary a lot globally. So in the US, for example, their inflation fell to 4%.
Okay.
But in the UK, it's about 8.7%. In Latin America, in Chile, it's between 8 and 9%. In Colombia, it's even higher than that. But in DOMREP, it is between 4 and 5%. If you look closer home, amongst the English-speaking Caribbean, in Trinidad, the latest data as of April, inflation there is about 6%. In Bahamas, the latest data as of March, inflation there is also about 6%.
Okay.
So there's a lot of variation. But what's important to note, though, is that certainly when we look at our English-speaking Caribbean neighbors, historically, their inflation has been significantly lower than Jamaica's.
So we're at 6.1%, coming down from 11% a year ago. All right. Based on your best forecast, how quickly will we get firmly between 4 and 6?
As I indicated earlier, we expect that certainly by the last quarter of this year, inflation will come back into the target range. Recall in April, it dipped slightly, then it went up back. So the path back to the target, as I said, it's not going to be smooth. It's going to be bumpy. Over the next few months, it's going to be a little bit above 6%. It's going to fluctuate between 6 to 7%. But we expect that by December, we should begin to see inflation more and more within the target range. And certainly over the ensuing months, we'll begin to see inflation settling down in this 4 to 6% range. But look, there are risks. There are inherent risks. There are a number of things that are not within our control. You know? Let's take, for example, agricultural prices. Those continue to swing because of the swings in the extreme weather patterns that we have been seeing. So there is a possibility that agricultural price inflation could be higher than what we're saying. We are seeing now the increases in telephone rates that is going to come through. We're going to be seeing the increases in the minimum wage that is going to be coming through. And we have to pay very careful attention as to what is happening in the labor market and what is happening to wages in the economy. So there are a lot of variables, there are a lot of things at play. And so there are risks on both sides. There are what we say upside risks that will cause the rate to be higher, and there are downside risks that would cause the rate to be lower. But when we look at all of these factors, based on all the information that we have now, we think that these risks are pretty much balanced, which means that we are confident that more than likely inflation will track pretty much along the path that we have said. But we have to watch this very carefully. We have to watch the incoming data very carefully.
One other thing I'm sure our viewers want to know about is the interest rate, particularly for those who have seen the mortgage increase. When will BOJ start reducing the interest rates?
Well, Sheila, the first thing we have to bear in mind that our primary mandate is to get back inflation into this 4 to 6%.
Right.
And we have to try to keep it there. So the simple answer to your question is that when we see that inflation is now firmly back into the range.
Low, stable and predictable.
Low, stable and predictable. then we will consider how we adjust the policy.
Okay.
In other words,
But as we've said repeatedly, this is going to be based on the incoming data.
well, thanks for the tips, Dr. Wayne.
The pleasure is mine, Anna and
And
Sheena.
you heard that, Jamaica, inflation is on its way back down to the target range of 4 to 6%.
Introducing the new $2,000 note. The new $2,000 note was created to help bridge the gap between the $1,000 and $5,000 notes. With the introduction of the $2,000 note alongside the $1,000 and $5,000 notes, fewer notes will be required to settle transactions. For example, instead of using 4 $1,000 notes to settle a transaction of $4,000, an individual could use just 2 notes, a combination of 2 of the new $2,000 notes. This substitution effect will lead to less reliance on the heavily demanded $1,000 bill, as well as generate cost savings for the bank over time.
Earlier, we spoke to Senior Deputy Governor Dr. Wayne Robinson, who gave us an update on the state of inflation. Now, here's a recap. It's time for Fast Facts. Number 1. Bank of Jamaica's primary mandate is inflation targeting, which is to contain inflation between the 4 to 6% range. Number 2. A low and stable inflation rate is a key component for predictability in the economy. Number 3. A high and rising inflation rate is bad for our society and economy. Number 4. Inflation is driven by the following factors: demand, cost, supply shocks, and people's expectations about inflation. And number 5. The exchange rate is more stable as a result of BOJ being more proactive in the FX market and maintaining tight Jamaica dollar liquidity. And that's it for our Fast Facts. That's all for our program this week, viewers.
Follow us on Twitter at Central Bank JA or on BOJ's Facebook page. You can also visit the website boj.org.jm.
We also invite you to send your questions on Twitter or Facebook.
Please do. We need to hear from you. And of course, watch us again next week, Centrally Speaking, at the same time on your station when we have another very interesting discussion.
I'm Sheena.
And I'm Anna.
Thanks for watching. Centrally Speaking is a production of Bank of Jamaica.